And then 5-minute, we would need something like this. Needs to put in a low. It could wick again, maybe, if it wants to. And then break this low. Right? This would make a break in market structure. But we needed to put a low in for it to break. Does that make sense? And then we need it to break strongly that it leaves a fair value gap. So then it gives us something to enter in off of and then possibly take down to sell side. Right? But we need more structure to tell us a confirmation and a story. We would need fair value gaps on the bullish side to start to be disrespected, right? Broken here. So we have 1, 2, 3, 4. So if you get at least 2 fair value gaps that are disrespected with bearish structure coming down, then it's a good indication that their draw on liquidity is going to be lower to the sell side. But you need these things to line up for you to make that story true, right? You would not want to just take this sell off of just a small rejection like this. Wait for an A plus criteria setup. Wait for everything to line up, right? We're inside the daily volume imbalance. We've taken this swinging high. If we can put in a low, even if I would want it to come higher and take out this high and then break lower and break this low. If you were looking for sells, that would actually help us, right? For it to go higher, to create this low, go higher, and then break it. Or if we have, even if it would be even nicer is if we have a failure swing high. If we put a low in, a swing low, and then fail to break this high, even better. We look at yes. We've done the same thing here. The only thing we haven't done on ES here is come into this daily volume imbalance yet. So on S&P 500, we still have this high and this high. But we did take out these relatively equal highs in here. All these highs. It's kind of the same situation on S&P 500 here. We have that 4 hour above this daily volume imbalance in here. NQ's already reached it, whereas S&P still has some ways to go there. So S&P could not maybe get there, or it could be just behind. So today's mainly about getting good at finding your draw on liquidity, right? Where is price most likely next to go to? If you can master that, then you can just look for signatures to line up with where you think your next draw on liquidity is. Like if we're thinking our next draw is down here beneath these lows, right? All these clean lows as support. We also have the new week opening gap beneath us, right? We just tap into a lot of buy side liquidity. So if price can give us a low and break it with a nice displacement that gives us a fair value gap to enter, then that would be a nice sell off, right? To add to this, we also have the power of three. Are you guys familiar with ICT's power of three concept? A bit, right? Okay. So if you want to think of like a daily candle, right? A daily candle has an open, right? A low, high, and a close, right? we were to draw it out, looks something like this, or maybe it's like, right, with top wick, bottom wick. This is where, since it's bearish, this is where it opened, right? Maybe the candle price opened here. Actually, this is price opened at the bottom here. So we made it a bullish candle. Okay, price opened here. We dropped down, made a bottom wick, and we drove higher and then close, right? So think of this area as like the Asian range or consolidation. Then we have our Judas swing or manipulation to the downside, right? Into London. Create some London lows. And then we drive higher. Right? Maybe we take out some buy side over here. That's from the left, right? Some sort of liquidity or old high, equal highs here, right? Maybe this is a volume imbalance like we just did, right? And then we come back in and close for the day, right? So consolidation, manipulation, distribution, right? Or also known as accumulation, right? Asian range accumulates. London, we have our Judas swing or manipulation down. Price reverses, and then we distribute in multiple phases up towards a higher time frame array or inefficiency, right? Accumulation, and then boom, target hit, right? So we take that, come down to price, and we look at what price has done, right? What do we have in here? Accumulation, exactly, Alan. Accumulation, manipulation up into this daily volume imbalance. Nice rejection, putting in some lows, it looks like here, right? So if this is our manipulation, then our distribution would want to come back down beneath these lows, right? We have this low that was made at 9:30, and these lows from 2 a.m. are pretty equal, right? We also have a lot of equal lows in here, but our most recent accumulation here from about 2:30 a.m., right? Here we have these lows, right? So we just closed here, right? So what did we do? 1, 2 fair value gaps disrespected. So we can say with more or less confidence that price is probably going to want to shift bearish here, right? I would like it to come up and then us break this low we just put in, So if this is a low being put in, maybe we come up like this. We break it lower. Oh, it says 1 minute for value gap 14,463. Yeah, yeah, you have this one, but you want a fair value gap that breaks market structure. So we had this low put in on this bullish candle just before it, but it never broke this before making that gap. We tapped in and broke it there, but there's nothing in here. And so, again, like I said, I would like it to break it this low aggressively and make a gap in here. This would be your higher probability setup. Right, we just put in this low on the 5 minute. I like to swing high and then break this low. I want this low to be broken so hard that we leave a fair value gap in this area. Right, same thing on the 1 minute. Because although we did close below 1 and 2 fair value gaps, bullish fair value gaps, we have this third one that we just tapped into here once, twice. So there is a potential for it to take the highs one more time and bounce off of this 5 minute. So I like that we're respecting 50% here of this volume imbalance now that we've traded below it coming up. Respected here, candle bodies. Now we're starting to break lower. There you go. So you have this one. So you can be a seller in here. Quick scalp down to this PD array. Okay. Or you could try to target. There's a small 1 minute sort of value gap in here. We can use them as targets as well. Or if you want to try to hold it to this swing low here, be a nice 1 to 3. So there. If you wanted to wait for even more confirmation, you could wait for a 5 minute fair value gap. That would be even stronger. Again, because we tapped into this 5, we could potentially bounce from here still. But on the 1 minute, we've already made a nice low, aggressively broke it, have this 1 minute tapped into, we're starting to move lower again. So now we would want to see this 5 minute and this 1 minute disrespected and just it drive through it aggressively. Just like that, yeah. we're starting to respect the lower end of this. Yep. There we go. So on the left side of this curve, we're treating this fair value gap here, the bullish one, as an inversion. We traded beneath it and then used the lower half here, the lower 50% as resistance. We now have this one. Again, accumulation, manipulation up, and then distribution to the lows. Let's go, Alan. So I'd like to see you use this as an inversion on the lower end half here. We could come up here and tap in there potentially if we get a pullback into this, a little bit of this fair value gap. Very nice trade. So this was your silver bullet inside that 10 to 11 a.m. Smart money reversal at the volume imbalance. We have our push down, up, create this displacement, right? We had that first little fair value gap that Alan pointed out. This one is our first stage of accumulation. We drop lower, come up, accumulate one more time in this area. Second stage of uh, distribution. I'm sorry, distribution, and then we aggressively push away. The reason why we aggressively pushed away here is because of we were in the second stage of distribution here. Up one, up again, two, inside that 10 to 11 silver bullet window, right? We put this low in, then we break it, candle body closure. This is your break in market structure, right? Drive up into this bearish fair value gap, and then boom, off to the races. Yes, this is a market maker sell model as well, right? Original consolidation. We drive up, accumulation, drive up, or accumulation, drive up, second stage accumulation, drive up, smart money reversal, low risk sell, second stage. This is your low risk sell in here, and then your first stage, second stage. So we measure this high to this low. Since our second stage distribution happened above equilibrium here, above 50%, we could see this definitely drive lower towards this new week opening gap. Right. You can also measure with the standard deviation this manipulation leg up from here to here. So 2 to 3 standard deviations give us around 2.5 here. But 2 would be 14, 11. So definitely give us that sell side. We also have this breaker here on this bearish candle. We move it over, overlaps with this 1 minute fair value gap. We have this high, low, higher high, down. Okay. Can you go over what you said about the second leg accumulation above 50%? Does that mean it's likely to drive lower prices? Yes. Yeah. So if we measure our sell side range here from the top to the bottom, right? This whole from this low to this high, this whole range. In the second stage distribution happened above 50% here in a premium. So more than likely, since we had a shallow run there, see how we just kind of barely didn't even take the low. One, two, we should get one more hit to the low around 143.11. Definitely taking out this sell side. One, two, we should get one more hit to the low. One, two, three. But not guaranteed. Yeah. All right, guys. Well, that's it for today's lesson. Hope it was super informative. Um, great, great call live there. Awesome call done for the day. See you next week. Let's go, Ellen. See you guys.